Welcome to Looking at the Markets with David Modell. I want to talk about gaps today and gap theory, or hypothesis it really should be called, because it is not proven. Nothing I'm going to talk about today is guaranteed or proven. It's just an idea. It's been said that all gaps get filled. And then some other people say that many gaps get filled, which is more likely than all, I would say. None of this is proven, but it's an interesting idea, and you might be able to get some trading or investing ideas from gap theory. And right now you're looking at tradingview.com, Apple stock daily candlestick chart. Each candlestick represents 1 day of price action. You don't get a whole lot of gaps during the day for, let's say, 1 minute candles. They're usually pretty continuous. But what about daily candlestick charts? Well, yeah, you could definitely get gaps. Like if Apple stock closes here, then you wake up the next day and it opens up here. Okay, that's a gap up. You can have a gap down if Apple stock closes here, but then the next day opens up way down there. In the morning, then you could have a big gap down. In this case, we're looking at a gap up. I mean, look at this whole chart. Which gap stands out the most to you? Well, obviously it's this one, the big one, right? Because the candles are pretty continuous, then a big gap up, and then maybe a little gap here, but then pretty continuous, right? More or less. And so we're mainly thinking about the big gaps, the meaningful ones, all right? The ones that stand out to you. Now, so did this one ever get filled? I mean, sometimes it seems like, and what do I mean by filled? Well, will there be candles, let's say, coming down here halfway between this gap, between these two candles? That would be a partial gap fill. What if you get candles sooner or later coming all the way down to here? Well, that would fill up the gap completely. That's called filling the gap, an example, okay? So look at Apple stock. After this big gap up happened, then the candles just went up and up, and it may seem like, oh, you know what, there will never be candles coming back down to fill down, I should say, this space here. This gap will never get filled. That's what it seems like for a while when the stock just keeps going up, but then eventually, there we go, back down, right? So, you know, the gap did get filled, okay? It's hard to tell because it keeps shifting over the candles, right? But it did fill it, okay? So as soon as you think something cannot happen, the market will surprise you almost every time. So it's an interesting idea, okay? And then you can look at this gap down, right? Assuming you don't include the wicks or shadows, right? Then look at that. Will it ever get filled? Yeah, it eventually did because it's Apple stock and it will go up to that level, okay? So gap downs almost always get filled, especially when you're dealing with a stock like Apple. All right. What about gap ups, though? Do they get filled back down? That doesn't seem to happen as often in stocks that tend to go up over time, like Apple, something like that, Microsoft, whatever it is, Amazon, Tesla, right? But oftentimes these gaps do get filled sooner or later. It's a hypothesis you want to test out with demo or virtual trading. Don't try it out, okay, with real money. All right, you want to test out any new strategy or idea with fake money, not real money, all right, because it might not work out as intended. And so if you do get, especially a gap down, those seem to get filled more often than gap ups with good stocks, high quality companies like Apple and that kind of thing, Starbucks, whatever it is, Amazon, Tesla. And so if you get a gap down, you could bet, you could wager. And it's up to you whether you include the wicks or shadows or not. Okay, some people just include the bodies of the candles, and others include the wicks or shadows. This is not a big gap anyway. You mainly want to concentrate, if you're testing out this hypothesis, with big gaps, okay? Like this is a pretty decent sized gap, okay? But I'm not as likely to bet that a gap up will get filled. I'm more likely to bet that a gap down will get filled because oftentimes they do. Not every time guaranteed, I don't want to say that, but oftentimes they do. And so if you see a gap down, and then if you want to bet in one way or another that eventually that gap is going to get filled, either in a few days, a week, a month, who knows? It might take longer, might take months and months. I don't know, okay? Because you might get a gap down and then a recession, okay? That could happen. But even those gaps seem to get filled sooner or later, especially with stocks that always seem to come back up to their all-time high, that kind of thing, all right? But for a short-term trade, what you could do is if you see a big gap down, you say, hey, I think that gap down is going to get filled back up sooner or later. You could have a stop loss or other exit strategy so that if it does turn out to be a recession, a market crash, and the stock just keeps going down and down and down, then you won't have to wait months or even years for the stock to come back up. I mean, look at what happened in the year 2000 to Apple stock. Okay, yes, I'm sure there were some gap downs that did not get filled for a long time there, so you want to be aware of that. All right, I know I talked fast with this one, but this is an idea that I really wanted to get to you. I hope you enjoyed this and will learn from it and try it out for yourself. But again, try it with virtual or demo trading, not real money, to make sure that it works for you, and see if those gaps do get filled sooner or later. And again, bigger gaps are the more meaningful ones to get filled oftentimes. Usually, okay? We're not talking about little, just tiny gaps here. We're looking for the big ones to see if they get filled. It's an interesting idea. Let me know what you think in the comments. I want to thank you for watching and listening. I will talk to you again very soon.